All right, what's going on, guys? Today I wanted to go over this continuation trade I took today. If you guys see my trade recap, April 13th, you'll see I have all the executions and stuff like that. But I wanted to go over this because this is a great example of trading continuations. Now, if you see my other education videos, if you go to my education playlist, check them out. There's one. I'll link the one I'm talking about. Where I talk about how specifically to trade continuations, where one draw on liquidity is taken, and how you kind of should approach these. Okay, so first of all, earlier in the session, I wanted to short. I shorted over here and got break even, thinking price was going to go to this unfilled gap. What happened? Price rallied up. So I'm going to put the replay tool back on. I'm going to show you guys from here, right? So at this point, we see that price displaces aggressively. What is our main draw on liquidity right now? So for buy side, so our buy side draw, our main one is going to be this 930 wick. You guys know this is an important draw on liquidity. If you watch my stuff, I always use these 930 wicks as draws on liquidity, whatever. And then above this, what is the next draw on liquidity? It's going to be the new week opening gap high, which is up here. I'm just going to mark it out so you guys can see NWOG high. Okay, so ideally, continuations, what do you want? You want price to displace towards the draw, retrace, and then you want to target the draw. Now, why did I not take this long? Well, first of all, for continuations, you usually want to have a clear draw or a break-even point. And as you can see right here, this candle took out my break-even point, so I didn't take it. But if you did, whatever, you could have longed, and you could have, obviously targeted that 930 wick. So what do you do if you miss the first draw on liquidity, right? So in this case, our first draw on liquidity is this 930 wick. Our second draw on liquidity for buy side is going to be this new week opening gap high. Now, once you get this huge candle to displace through the 930 wick, do you just long automatically? No. Okay. So how do you trade continuations once we pass one draw on liquidity, right? So once price takes out this 930 wick, one of two things can happen. Price can take it out and then immediately come back down and we can start a reversal, or price will continue past it and continue to the next draw on liquidity, which in this case is the new week opening gap high, right? So what are we waiting for? If it's going to be manipulation, we obviously want to see price come like this, sweep it out, get an inversion or displacement to the downside, and then we want to short. But if price continues to displace aggressively above one draw, we want to see price retrace and then, trade towards the next draw. So when we get this strong close above the 930 wick right here on this candle, we're confirming likely that we want to continue higher. This doesn't look like a quick manipulation where price is going to go back lower. We strongly displace above this draw. So this is telling me at this point that we want to continue to the next draw on liquidity. Now again, when we pass one draw on liquidity and we're trading continuations, we want to see price displace past one draw, retest into or retrace into a fair value gap, and then get a displacement entry or an inversion entry and then target the next draw on liquidity, which is exactly what we end up doing on this trade. So we go over here, back here, okay? What does price do? Price aggressively displaces through the 930 wick, and then it comes back because you don't want to FOMO in on this candle right here. You want to wait for a retrace, okay? So what does price do? It retraces into a fair value gap, and in this case, what is it? A 2-minute gap. So now out of this 2-minute gap, what do we want? We want an entry model. So in this case, the entry model can be an inversion, it could be displacement or whatever. Just something to confirm that volume is in your favor and price is displacing in your favor, and you want to look for a continuation to the next draw on liquidity. So we displace past one draw, we get a retrace into a 2-minute gap. We get in 1-minute inversion with strong displacement. I get filled a little bit later, but I'm just going to put this here just for the example of this trade. You get the entry right off this close right here. This is your break-even point, and you target the new week opening gap high, which is the next draw on liquidity. Boom, 2-hour trade, that simple. So what are the key takeaways in terms of continuation trading? Okay, you don't want to just long on this breakout candle right here, because what you're going to wait for is confirmation that price is going to continue to the next draw on liquidity. So in this case, price displaces past the 930 wick, which is our first draw. We get a retrace into a fair value gap, we get an entry confirmation, and then we target the next draw on liquidity, which in this case is the new week opening gap high. That's how you want to trade continuations if you miss the first draw. If you miss the first draw, you wait for price to displace past it and confirm, you wait for it to retrace, you take your entry, and then you target the next draw on liquidity. You don't just FOMO in on the breakout here, right? Because a lot of times what's going to happen, it's going to manipulate back in, stop you out, and then it might go, or it might just completely reverse. So that's how you have to trade continuations when one draw gets taken out. You wait for a price to displace past it and confirm that it's likely going to go to the next draw, retrace into a gap, displacement, inversion, whatever type of entry you use out of that gap, and then you target the next draw on liquidity. So once again, first draw on liquidity here is the 930 wick. Obviously it gets taken out, don't get an entry there. Price displaces past that 930 wick, so now it's confirming that we likely want to go to the next draw on liquidity. From there, price pulls back into a gap. In this case is a 2 minute. We get a 1 minute inversion out of that gap. What do I like about this inversion? It gives a strong displacing candle with a strong body close. Take the entry there, stops below the candle body. We have a clear break-even point, and we target the draw, which is that that new week opening gap high. So that's how you guys need to approach continuation trading. I go over this in the other video. I'll link it in the comments or something. But basically, if your first draw on liquidity gets taken out, what do? You wait for price to displace past it, retrace into a gap, get an entry model, and then you target. You don't just FOMO in after it breaks above. You want to wait for it to confirm, and then you look for that trade. So that's it for this one, guys. Want to knock this quick one out and go over this continuation trade, because this is like a textbook continuation trade, literally. So I'll link the other video in the comments, so go check that out, and I'll talk to you guys later. Peace.